And welcome to week number 6. This week is where I always say the rubber meets the road because this is where this whole class is leading you to. This is preparing for your retirement. And I know most of you are younger, you're in your late 20s, 30s, some of you may even be in your early 40s, but I don't know. But what we're looking at this week is starting in chapter 11. It's the investing basics and evaluating bonds. Now, when you're looking at what you want to do with your investing at your ages, you're in for the long haul. So you don't want to go crazy on your investings and get some off the wall stocks and bonds, but you can risk a little bit more. Money and different things like that because you've got time to recoup it. So chapter 11 is starts with telling you why you need an investment program. Most of you are not going to be fortunate enough or not right now of working for a company or a government that actually has a pension plan. Most of them don't even do pension plans anymore. Most of them are 401ks, which you pay into and then you're invested and you can kind of determine what you want to do. Pension funds were back in the 50s, the 60s, the 70s, and even into the early 80s. People would go to work for corporations or companies, and they actually gave them a pension so that if you stay with our company 20 years, you might get this amount, 30 years, you get this, and different things like that. But now there are very, very few people that do pension funds anymore. I do know if you're in the profession of teaching, they do still have a teacher retirement system, which I'm part of. And they do, that's considered a pension fund. And so you get a certain amount every month based on that. But most of the time, most private organizations, Ford, GM, Lockheed, different things like that, they want you to invest in a 401k. And then you want to know how to determine what's the best fit for you. So this chapter will help you look at that. There's also looking at what are some of the factors that you can look for that's going to help you reduce that risk. Then the last part of the book is talking about bonds. Now, if you are a person that you can't stand uncertainty, well, big word, then you might not want to go to stocks. You might rather stay with bonds because bonds are they're pretty stable. They don't offer as high of an investment generally, but they do give you a little bit of security. So it's talking about bonds. So we're talking in chapter 11 mostly about government and city bonds, different things like that you might want to invest in. Then we move to chapter, and by the way, I know y'all don't have most of you didn't buy a book, but if there's in our book, there's a couple of worksheets. It's talking about your investment goals that you can write down. And then there's one on evaluating corporate bonds. If you would like for me to send you a copy of this, let me know. I'll scan it and send it out there so that you can kind of look at whether or not you want to invest in bonds. And then chapter 12 is just strictly stocks. What what do you need? What are the difference between common stock and preferred stock? That is something very important that you want to look at. What's the difference in those two? And then how do you evaluate a stock? How do I go about finding out what's their return on investment? You will hear a lot of financial brokers talk about ROI. That's considered return on investment. Oh, we're going to give you 12% return on investment. Be wary if somebody's going to guarantee you a 12% return. Not going to happen generally. Not in today's economy. Then you're going to look at analyzing why causes a stock to go up and what causes it to come down. If you follow the stock market every day, it'll say, well, the Dow went up, the Dow went down, and you're going to panic and say, oh my gosh, I lost so much money. So this gives you some ways that you can evaluate, should I panic over a stock? How are stocks bought and sold? Most people use a stockbroker. There are some people that do it online that they feel confident. I never felt confident enough to do my own stock investing. I relied on my stockbroker. Um, I just I just didn't want to worry about it. I let him worry about it, and if he felt like the stock was tanking, he would call me. So you want to think about that, and then talks about how to know when to trade your stocks, and you'll hear about short-term trading, long-term trading, and different things like that. But again, these two chapters, they're to me some of the most important two chapters that you're going to look at because it does help you prepare for your retirement. And believe you, your retirement is going to be here before you know it. You're going to be blink, your kids are going to be grown, you're going to have grandchildren, and then you're going to say, well, it's time for me to retire. I've worked 40 years. I'm ready to retire and enjoy. If you have not prepared, you're going to be standing in front of Walmart and saying, would you like a buggy? Welcome to Walmart. So, and there's nothing wrong with that. Don't get me wrong. But, most of us don't want to have to work during our retirement. Yes, I am retired, but I love teaching. And that's one reason I do the online classes is because I don't have to sit in front of my computer or stand in front of a classroom every day and teach, even though I still love it. I love it. I love it. I love it. But I have freedom. I get up every morning and I go to the gym and I work out and I go to lunch with friends. I'm enjoying my retirement because I started preparing for it when I was in my 30s. I wish I'd have been smarter. I wish I'd have had a professor or a teacher that told me the day you go to work, you start your retirement plan. I didn't because nobody ever told me that I would need to do a retirement plan. Even though I have teacher retirement, I could have had more had I started at an earlier age. So enjoy these two chapters and let me know if you have any questions. Thanks a lot.